Hello, it's Wednesday the 5th of August 2015. My name's Amandeep. I'm a senior analyst at HDB Cereals and Oilseeds Market Intelligence. For today's market update, I'm going to be focusing on the battle between the two heavyweights of the grain market, wheat and maize. Now, we don't grow too much maize here in the UK, but it's an important market to be aware of because of its influence on the wheat market, including UK feed wheat futures. So not only is maize the largest grain produced globally, but it's also the main feed grain. So it's in direct competition with wheat, which means that both of their prices are linked with one another. And you can see this in the graph here, which shows wheat and maize prices over the past few months. Now, the rally that we saw at the end of June, beginning of July, was caused by unfavourable weather prospects. So in the US, we had wet weather, which was causing disruption to maize plantings and also to the wheat harvest. Meanwhile, in the EU, hot and dry weather was causing concerns for crop yields. Since mid-July, though, the arrival of benign weather in the US has put a dampener on global prices and has more or less undone the rally that we saw earlier. UK feed wheat futures during the rally, for example, rose by £13 per tonne to reach a peak of £135 per tonne. But in recent days, they've actually fallen below the £120 per tonne mark for the first time since May 2015. And yesterday actually closed at £118 per tonne. Although favourable weather has arrived in the US, the conditions haven't really improved much in the EU, with still pockets of hot and dry weather. The French wheat crop has managed to escape from any ill effects of these hot dry conditions, as the weather arrived too late to have an impact on yields. But the German wheat crop hasn't had such a lucky escape. And in the past few weeks, we've seen various forecasters downgrade their production estimates for German wheat production. The EU Commission, in their last crop monitoring report released just last week, has lowered the overall EU wheat yield estimate compared to their June estimate, but is still overall above the 5-year average. For maize, though, it's a different story. The EU Commission lowered their EU maize estimate from 7.2 tonnes per hectare in June to just 6.7 tonnes per hectare in their recent estimate. And that now brings the maize estimate below the 5-year average for the first time in these 15-16 forecasts. We're going to take a bit more of a closer look at the EU maize crop, taking France as an example because it's the biggest EU maize producer. This graph here now shows the overall condition results for the French maize crop, showing the proportion that's in good or very good condition from the start of May to the end of July. Now, as you can see, at the beginning of this period, the French maize crop, between 80 to 90%, was in good or very good condition, and not far from what we saw in 2014. From mid-July onwards, though, conditions have deteriorated quite considerably, and the last condition scores that were received for the week ending 27th of July showed that the maize crop condition in France, only 59% was in good or very good condition, and that compares with 84% in 2014. There's clearly more severe issues for the maize crop rather than the wheat crop in the EU. On a global scale also, we're seeing a much tighter situation for EU maize than compared for global maize rather than for wheat. And that's been shown in the recent USDA estimates. So in the July USDA estimates, the wheat surplus was revised quite healthily higher, as you can see in the graph, taking the stocks to use ratio, which is essentially how much stocks you're expecting to be left over once all demand's taken into account, from 28% to 31%. Whereas for maize, the surplus was actually revised lower. Accordingly, the stocks to use ratio was revised lower as well. What these contrasting situations for wheat and maize have meant in terms of prices, shown in the graph, this next graph here, which shows the spread between wheat and maize prices. So both globally and on the EU level, we recently saw wheat and maize prices converge. In the US market, for example, in mid-July, we saw the percentage premium of wheat fall to just 15% over Chicago maize, which was the lowest since March 2015. On the EU, French wheat premium over French maize fell to just around 2.5%, which is actually the lowest since February 2014. And what this means is that a lower premium of wheat over maize is more favourable for including more wheat into animal feed demand. Since then, however, because of the favourable weather conditions in the US, we've actually seen the spread diverge again somewhat. But the global price can have an overbearing influence on the EU situation, regardless of the concerns we're having in the EU. So EU prices have fallen, but at a slower rate compared to the US. In the last day or so, though, the EU wheat maize spread has started to converge again, so this is going to be something to keep an eye on. It's worth keeping an eye on how this wheat maize spread develops going forward, because the lower the premium of wheat over maize, the more incentive there is to include wheat in animal feed rations. From a UK perspective, that's important because we've already got a large surplus to carry over from 2014-15, and we're still expecting a surplus again in 2015-16. So that would be beneficial to use up wheat and increase wheat demand. Also in the EU, we're looking at a much tighter feed grain situation this year compared with last year. First of all, the overall wheat, maize and the barley crops are forecast lower year on year. Secondly then, we're unlikely to have the quality issues we had last year. So if you remember last year, during the French wheat harvest, wet weather meant that a lot of it was downgraded to feed wheat. At the moment, around 70% of the French wheat crop has been harvested in dry conditions, so it's unlikely we're going to have a repeat of that situation that we had last year. Tighter EU feed grains will also be beneficial for UK exports, because it means less competition to get UK feed wheat into the European market. However, as always, we've got to watch out for the currency, because that could still remain an obstacle and challenge as we've seen in the previous season. So make sure you keep up to date with all the developments of how this progresses on the HDB Cereals and Oilseeds Markets website. That's all for now, and thank you for watching.